Hello traders at CMC Markets. Welcome to another update by RRG Research. This is for Monday the 4th of December, and I'm recording this on Friday the 2nd of December. My name is Trevor Neal and I'm presenting to you today from London. We're going to look today at the global stock indices as we always do. We will follow up on previous suggestions we've had with regard to the DAX in particular and individual securities, and also what's going on in the dollar and how to act in these conditions following this big pullback in the dollar. We start by looking at the major international stock indices versus the MSCI World Index in the week, which is in the crosshair here, and this is a weekly sampling, and we can see a very clear divided picture here. We've got a group up in the top right here and generally heading northeasterly, although a little blunting going on last week, and then we've got the other group which are all heading decidedly southwesterly, that is westerly, weakening on a relative basis versus the MSCI World, and southerly, meaning without positive momentum. And we have a very long tail here on the Nikkei and the Nasdaq and the S&P and the Russell 2000. So that US group all performing relatively poorly compared to DAX, stocks, CAC and the Australian here, not the FTSE. The FTSE is in this group of heading southwesterly in the bad lot, if you like, and the Dow Jones Industrial Average, which we highlighted and talked about last week, is holding a good position here. But if you like, the best is the stocks, the European Broad Stock Index and the DAX in particular. Now, in today's article that we've written for CMC, Julius and I, we follow up on Julius's recommendation where he was keen on the DAX as an index versus the MSCI World, and using our RRG model, he picked up 3 individual securities with good potential, looking at their absolute charts, and I followed up with on those 3 securities. So I highly recommend going and having a look at that article. On a daily RRG chart of the same group of indices, we've got a much more mixed picture in here. We've got some in the improving quadrant here, but what is noticeable is the only ones which are on the right of 100, although they are in the weakening quadrant, are the stocks and the DAX. So in terms of relative performance versus the MSCI World, the stocks and the DAX are the best, both in a daily horizon and also in a weekly horizon. But in the weekly horizon, they have also good positive momentum as well. Since last week, the S&P index on this daily chart here we can see is continuing its progress upwards since it put in its lows we saw on the MACD here, which is still powering ahead and well above its signal line, zigzagging our way higher here, higher lows and higher highs in place here, breaking through resistance levels, but moving towards the next resistance level, which is at 4,200 and 4,300, which a break of that would I think bring in a great deal of energy, because it would break this pattern, long-term pattern, year-long pattern of lower highs. But at the moment we're powering ahead, momentum is strong, stock markets are looking good. I'd like now to move to currencies. And the dollar index is a basket we use to sort of represent the dollar. And we can say, when we look at this, that after 2 years of a bull run from the end of the last quarter of 2020 into the last quarter of 2022, big bull run off this double bottom here, It has come to an abrupt end. We've had a sharp sell-off in the dollar, rise in other currencies. Even the pound is flying at the moment, and it's has broken many support levels. Just currently testing. We'll look at this in more detail in a daily chart in a moment. Important support level. Then there's another one. Then a very important one I'd like to draw to your attention, which is from the 2020 high, and this is at 103. This level here, and this could be a base, could be where this could stabilize. It will also be a 38.2% retracement of the move up here, but that's way ahead at the moment. The momentum is strong on the downside. The MACD is moving away from its signal line here. The gap is widening, so on a weekly basis this has got very strong downward momentum. On a daily chart, we see again this sell-off here off the top area here. The 110 level was the big break, and we had the lower highs pattern. It really did struggle at the terminal phase in September and October when it was making its high. Then it broke down very hard, taking out these higher lows, very regular higher lows pattern is in here. There's a bit of a pause around 106. Now currently, as I present this on Friday morning, the 2nd of December, it is breaking the low of August the 9th. The next support comes in from June, and that's at 103.70, and then this one here is that big high, which is a magnet, I think, for the market, but could be the level at which we stabilise. The one I showed you a moment ago in the in the weekly chart. This is a daily relative rotation graph of the major currencies versus the US dollar. So US dollar here, they are outperforming the dollar because the dollar itself is so weak to varying degrees. The New Zealand dollar, so furthest to the right here, pound pretty good, yen pretty good, overdue bounce there, and all of them over on this side, but none of them actually in the leading quadrant. And so what we've got on this daily sampling here, so each sample here is a day, yesterday, day before, is a blunting, a loss of momentum on the upside of these currencies. So I think, you know, this may be reflecting the fact that we're coming towards these significant support levels for the DXY, for the dollar index, so that the rise in these markets is beginning to blunt. So let's have a look at a couple of them in a bit more detail. This is a daily chart of the euro versus the US dollar. We have this rhythmical decline in the euro as the dollar came into its high. Then the pattern of low, lower low, lower low, lower low, lower low, lower low, higher low, higher low. We put in what we could call it a complex head and shoulders pattern, but basically we had lower lows ahead down here in October, and then starting to have higher lows, and now some acceleration as we broke the downtrend line, which had dominated the action for many months in the euro. Now we're in an uptrend. We've broken significant levels of resistance, 103. Now the next resistance coming up is 106, and then 108. Two big figures apart, each of those. And we seem to have a lot of power on the upside. Here is the MACD, and it had a little bit of a wobble here at the resistance at 104, but it's regained its composure, breaking up as I speak here, ending the week extremely strongly and with lots of upside momentum here. So looks like it is continuing. No real serious sign of loss of momentum, although the resistance is intensifying. The resistance levels are becoming more difficult at 106 and 108. This is a cable on a daily chart here. So here, fall in cable, lower highs in place, climactic sell-off down to 103 there, but this trust debacle, then a violent turnaround, and then now forming a pattern of higher lows and breaking minor resistance levels, and now as I speak challenging the 123 handle here, and two tops in place there, and that's a significant resistance level. If it can clear that, then I think it's clear to a run to 126. The momentum is very good at this point, so the runes look good for that to happen. If it were to stop, it could be here. That is for sure. We haven't really cleared it yet, but it's a strong Friday close after a great week and a great run since those terrible dark days at the end of September. And now, just to conclude with regard to the currencies, I think the current currencies, we've got a weak dollar, so we've got currencies, particularly the pound and the euro, two heavyweights here, benefiting very strongly from that. But the dollar index itself is approaching significant support points, support for the dollar, therefore resistance points for the currencies. But these two particular ones look like the friction is not that high on the upside for a bit further. And so the other currencies may lag, but these two in particular, GBP and the euro dollar, may well continue to lead as these resistance levels, which are not that strong. I know this one we're at the moment, 123, is fairly strong. But if we can clear that, then I think the way is clear for the 126 level, challenge of that level. So those are the two that I prefer, looking at the RRG chart. When we look at, for example, the Canadian dollar and the Scandies, they're not looking so good, but the pound is looking good and the euro is turning around here too. So other than the New Zealand dollar, I think those are the two best ones for us at the moment. I will leave it there for us for today. Thank you very much indeed, everybody, for your attention and your time today. We'll be back again at the same time next week. So it's goodbye from Julius and I at RRG Research, and may the trend be with you.